Saudi Arabia is set to tap the dollar bond market for the second time this year as weaker oil prices edge the kingdom's budget into a deficit. The Middle East's largest economy plans to sell Islamic securities known as Suku, maturing in 6 and 10 years, according to a person familiar with the matter. The initial yield guidance is 110 basis points over U.S. Treasuries for the shorter notes, and 135 basis points for the longer ones, the person said. The International Monetary Fund has said Saudi Arabia, which slipped into a fiscal deficit for the first quarter as the economy slowed and spending increased, may post one for the full year too. The fund's latest projections put the country's break-even oil price at almost $81 a barrel, above Brent's current price of around $74. Oil has slipped in the past month, despite supply cuts announced by Saudi Arabia and other members of OPEC+.
Traders control maybe generations, and let's compare
the IMF's projection of a deficit of 1.1% of gross domestic product for Saudi Arabia in 2023 is at odds with the government's expectation for a second straight surplus. Last year, the government reduced its 2023 financing needs by pre-funding around 48 billion rials, $12.8 billion of debt. The National Debt Management Center said Saudi Arabia's dollar bonds trade at an average yield of 4.6%, according to Bloomberg indexes. But the kingdom last sold dollar bonds in January, issuing $10 billion. Citigroup Incorporating, JP Morgan Chase and Company, and Standard Chartered Please are managing the latest sale.